Hello and welcome to The Trade on this Thursday. Well, let's take a look at what traders are watching first before we get into the charts. Facebook owner Meta warning of significant acceleration in its AI-related infrastructure expenses next year while beating analyst estimates for third quarter revenue and profit. Samsung Electronics saying its third quarter profit jumped from a year earlier, but the pace of recovery weakened from the prior quarter as it struggles to cash in on the AI boom that has benefited chip rivals such as TMSC, I should say, and SK Hynix. Japan's factory output rose 1.4% in September from the previous month versus a median market forecast of 1%. And the Bank of Japan is expected to maintain ultra-low rates later today, a signal and a cautious approach to rolling back its massive monetary stimulus as political uncertainty and those jittery markets cloud the outlook with new government yet to be formed post that poll over the weekend. All right, let's get into the charts that matter. To do that, Jonathan Tacadena joining us from MPC Markets. Jonathan, good to see you again.
Well, thanks for having me.
Getting closer and closer now to that US election.
That's right. But less than a week away now.
Yeah, it is indeed. Although it's not clear if there'll be a result in that time.
That's true.
If it's contested. Nonetheless, whoever wins, be it Kamala Harris or Donald Trump, expectations that the US debt position is simply going to worsen. There's no interest from either of them that they're going to rein in that debt. Now, you take a look at bond markets, and the Fed may have cut by half a percentage point, but the bond market's pretty much wiped that out, hasn't it?
That's correct. So generally what the Fed wanted was after they cut, they want the borrowing cost to less. So obviously people with mortgages, just fixed interest, they're like, we need some pressure relief here. And what the bond markets just said, that no. So I've popped the chart here of the US 10-year notes. There you go. And I want to just highlight that blue line. That's actually when they actually cut rates. So they cut rates 50. So seen as an emergency cut. Usually after that, bond yield should bond prices should rise. But we've seen the actual opposite here. So what they just showed you is that the bond market has pretty much called the Fed's bluff and said that it looks like you guys don't really worry about inflation, and we're going to do the worrying for you. And basically, what they've said is that if you want us to fund your debt, we want higher yields from here. And what we've seen is we've just seen low after low, and we're at multi-month sort of lows on the bond prices and multi-month highs on the actual bond yields. If you, it's not shown there on the futures, but if you actually have a chart of the bond yields, I believe we're above the 429 mark on the 10-year notes yield-wise, and that's quite multi-year highs. Multi-month highs.
What are the implications of that? Because normally you would see risk assets come off, in particular equities.
Yeah,
that hasn't happened.
So what this shows you is that it's actually all about inflation. So in inflationary environments, hard assets do well, and we'll talk about a couple of hard assets as well. But stocks actually do well in an inflationary environment as well. So it maybe not in real terms. So inflation might be say 5% and stocks might be going up 4%, but generally stocks don't tend to collapse in an inflationary environment because obviously people still want assets that are generating income, and that's what stocks are.
All right. So you're saying the best alternative then is to go to those hard assets.
Yeah.
Well, I guess the most obvious one being gold.
That's right. So that kind of explains why gold has been on this mega run. This is just an updated chart here. I remember coming here when the last time the gold price touched that blue line, it was hovering around that 2,600, and I just said, hold on strong. This thing should hold it in there, and it's actually accelerated now. And my original price target was that 2,800 mark, and we've bounced straight off there, and it looks like we should hit that maybe next week. During that election period. So,
would you hazard a guess though whether we're going to 3,000?
Yes, I mean, unless so the only way that I can see gold sort of pull back is that if Donald Trump wins and Elon becomes the he's
the chief cost cutter.
That's correct. So if he's able to actually rein in the debt and somehow manage the fiscal position of the US, then I can see a sort of a pullback there, but I don't think Trump's going to, it's easy to say, during the campaign, we're going to cut costs, cut this, cut that.
Yeah.
Once you're actually in there and people actually go, no, you can cut that, but not in my backyard, then people are just going to revolt. And it's easier to say, but hard to
Well, of course
implement in practice.
He's a master of that too, saying what he likes, essentially. But nonetheless, I mean, even if he was to get in, though, his broader policy is still saying it's been very much inflationary.
Oh, absolutely. So he's going to put tariffs in place. But generally, like the way he's going to attack it is that if he does get in, his main sort of point of attack is just lower energy prices.
Yep.
So US is swimming in like hydrocarbons. They're actually in some parts of Texas they flare off. Natural gas there. If I did bring a chart of natural gas here, you see that it's quite low there. So that's one point of attack where he can actually attack inflation. But just generally, the debt position is quite. It'll be hard to manage from here without printing more.
So, Jonathan, you're saying another way to play this
yes.
is with crypto assets. Now, as a result, we have seen Bitcoin, it's approaching its record high, isn't it?
Yes. So it just depends on which exchange you're on. Like where, on some exchanges, we've actually hit a new high here. And there's a chart there. We're kind of like just on the verge there. Now, the only thing I will say about crypto is that the crypto sort of bros, they were always talking about, once the ETFs come in and the institutional money comes into crypto, we'll see a massive surge in the prices. And what's actually happened is that, and the way I see it, is that the traditional finance guys have come in, and they've been able to implement strategies that they've put in place in the traditional markets into crypto. So crypto, we saw 100x gains, 10x gains in very short space in time. And what the traditional finance guys have been able to do is kind of put the brakes on crypto and actually just bled the patience out of the more traditional players there. So I do think it breaks out, but I do think that those days where where Bitcoin would go to $100 million, like whatever those ridiculous numbers were, I do think it breaks out, but I think it does it in, say, the pace of gold. So gold's gone from, say, 2,100 to 2,800 over, I think, about a 4-month period. Percentage-wise, that's maybe about a 30% gain. So I think something like that will happen in Bitcoin from here. So I'm predicting a move from about 70 to 100 over a month type period. Not in a spectacular breakout move.
Is that on the assumption that Trump wins, or does it matter?
If Trump wins, it should accelerate a little bit faster.
Yep.
But just generally, I just think it just does break out and sort of does it in a steadier pace.
Jonathan, lots to watch there. Thanks so much for talking us through the charts.
No problems. Thanks a lot for having me.
And that is the trade for this Thursday.